2 days ago, the United States Senate voted to ban the Federal Reserve from ever creating a central bank digital currency. Every major news outlet called it a victory for freedom. Social media exploded with celebration, and almost nobody stopped to ask the one question that actually matters. Why now? Why, after years of quietly developing digital dollar prototypes, did the US government suddenly decide to kill its own project? The answer is not what you think, and once you understand it, you will never look at your money the same way again. Let's start with what they told you. They said the CBDC was a threat to privacy. They said it would give the government the ability to track every transaction, freeze accounts, and control how you spend your own money. And they were right. Every single one of those concerns is legitimate and documented. China's digital yuan already does all of this. The People's Bank of China can see every purchase, set expiration dates on your money, and cut off anyone they don't like from the financial system entirely. The US saw this model, studied it, and for years appeared to be building its own version. So banning it sounds like a win. It sounds like the system worked. It sounds like the people spoke and the government listened. But here's where it gets uncomfortable. Because while the United States was publicly banning the digital dollar, something else was happening that got almost zero attention. The European Union quietly mandated that every American visiting nearly 30 countries must now surrender fingerprints, biometric data, and a photograph, all stored in a centralized government database. The United Kingdom moved forward on digital ID infrastructure so aggressively that 2.75 million people signed a petition to stop it in a single week. The government responded by saying they're considering it. In India, the government already linked food rations, pensions, and hospital access to a digital ID system. When biometric data was hacked and identities were swapped, entire families were denied food. At least 24 people starved to death in just one state. Not from famine, from a software error. Now, here's where this story takes a turn that should genuinely concern you. The CBDC ban in America does not ban digital identity infrastructure. It does not ban programmable money issued by private institutions. It does not ban tokenized deposits, stablecoins pegged to the dollar, or blockchain-based payment rails operated by corporations instead of the Fed. In other words, they banned the government's version of digital control, while leaving the door wide open for the private sector to build the exact same thing. And that private sector is already building it. BlackRock, the largest asset manager on Earth with over $10 trillion under management, has been aggressively accumulating Bitcoin during low-liquidity trading hours. Millions of dollars at a time purchased when most retail investors are asleep. The head of digital assets previously worked at Ripple. They're tokenizing billions in US dollar liquidity funds on blockchain networks. They're not just buying crypto. They are building the infrastructure for a new financial system, and they don't need the Fed's permission to do it. But that's still not the part nobody is talking about. The real story is what the central banks themselves are doing behind closed doors. A viral confession from a reserve manager at an unnamed central bank laid it out in plain language. They are buying gold at record pace, hundreds of tons per year. Poland bought 95 tons. Brazil bought 43. China reports 1 ton, but every insider knows that number is fabricated. 95% of central banks surveyed plan to buy even more gold next year. They surveyed themselves on whether they trust themselves. They don't. They trust gold. But they can't say that publicly, because admitting they don't trust the money they print would collapse the very system they manage. So they call it reserve diversification. Diversification is a polite word for escape plan. Now, here's where it all connects. And this is the reason I made this video. The US didn't ban the digital dollar because they care about your privacy. They banned it because they no longer need it. The surveillance infrastructure is being built anyway, just not by the Fed. It's being built by private companies operating under regulatory frameworks that give them the same power without the same scrutiny. A CBDC controlled by the Federal Reserve would be subject to congressional oversight, FOIA requests, and public accountability. A tokenized dollar system run by BlackRock, JPMorgan, and a handful of fintech firms that is subject to terms of service agreements that nobody reads. Think about this. Your bank already restricts when you can move your own money. Try to transfer funds after 5 p.m. and you'll hit a wall. A system built in the 70s, running on infrastructure older than the internet, decides when you can access what is supposedly yours. That's the current system. Now imagine that system upgraded, not to serve you faster, but to monitor you more precisely. Meanwhile, the institutions that run this system are quietly moving their own reserves into assets they actually trust. Gold is at $5,000 an ounce. Bitcoin is being accumulated by sovereign wealth funds and the largest financial institutions on the planet. They are exiting the system they built for you while telling you everything is fine. The governor of one central bank went on television last month and said inflation is anchored at 6%. It used to mean 2%. They moved the anchor. That's not monetary policy. That is gaslighting with a spreadsheet. And on the other side of this equation, companies like Palantir are building AI-powered surveillance platforms, directly integrated with the Department of Defense, the NSA, the CIA, and the FBI. Systems that fuse satellite imagery, drone feeds, intercepted communications, phone metadata, and financial transactions in real time. Today those tools are pointed at foreign targets, but the infrastructure doesn't come with a geographic lock. The legal framework for domestic use already exists. When 4,000 Google employees sign petitions, 13 Palantir employees walk out, and OpenAI's head of robotics resigns over AI being weaponized for surveillance and warfare. Those aren't political statements. Those are people who've seen what's being built and are telling you to pay attention. So, here's where you stand. The government banned a thing they no longer needed and called it a victory. The real control architecture is being built by private institutions with less oversight and more data access than any government agency. Central banks are hoarding hard assets while telling you to trust the paper, and the surveillance infrastructure to monitor every financial move you make is already operational, just wearing a corporate logo instead of a government seal. The good news is that you're hearing this. You know the game now. Bitcoin exists precisely because people saw this coming 20 years ago. Gold exists because people saw this coming 2,000 years ago. The tools for financial sovereignty are available to anyone willing to use them. The question isn't whether the system is changing. It already has. The question is whether you'll position yourself before the switch flips, or after. Because once the new architecture is fully operational, opting out gets a lot harder. Now you know, and knowing is the first step to making sure you're not the last one to figure it out.